an executor is one of the most daunting responsibilities one can undertake. Often underestimated in its complexity and its importance. It's not just taking things off a checklist, it's about taking yourself through a minefield, sort of like a minefield of legal and financial obligations while honoring the loved one's legacy. So as an executor, you're not merely handling documents, you're entrusted with a sacred duty of preserving a loved one's legacy, navigating intricate legal terrains, balancing the interests of grieving beneficiaries. It's a lot. So from understanding probate processes and managing estate assets to dealing with tax implications and communicating transparently with all parties involved, the role requires a high level of diligence, definitely patience, and some emotional intelligence. As you know, I feel that one misstep can trigger costly legal disputes. I've seen it happen. Shatter family bonds. I've seen that happen and lead to devastating financial losses. So the consequences of even minor errors can be profound, potentially derailing the entire estate settlement process. And beneficiaries, they could end up in prolonged legal battles. The estate's value could be significantly diminished, and your personal reputation could be at stake. However, with the right guidance and knowledge, you can avoid these common pitfalls. And that's what we're going to do today. We're going to learn about the 12 common mistakes executors make and how to avoid them. And you'll be equipped to navigate this challenging journey with confidence, ensuring that your loved one's wishes are honored, everybody's happy, and the estate is settled smoothly and justly. So, whether you've been named as an executor, or you're putting your will together and you're thinking about naming somebody, or you're in the process of deciding who to appoint, this type of thing, this video definitely is a must-watch for you. Uncovering these 12 most common mistakes. Make sure there's no stress, no legal battles, no family feuds, all that. You want to make sure that you're armed with knowledge and avoid pitfalls completely. Because if you understand these points, you can save countless hours of hassle and potential thousands of dollars. So stick around because the insights in this video are not just helpful, they could be a game changer for your future, your family's peace of mind. Let's get started. So mistake number one, I call it delay in handling tasks, because you don't want to delay. The probate process often is portrayed as all this paperwork and legalities, and can indeed be lengthy and cumbersome, but executors play a pivotal role in getting through this intricate maze. So picture that you have a cascade of 20 crucial tasks awaiting your attention. You're the executor, and now each task is delayed by just 3 weeks. You're then looking at over a year added to your probate journey. So you realize that every delay prolongs just not the process, but also the emotional and financial strain on everyone involved. So stay proactive, stay on top of your responsibilities as an executor. You're not just keeping the wheels turning smoothly. You're actively preserving the legacy and intentions of your loved ones and your siblings, whoever it is, are the beneficiaries. Mistake number two, paying out funds too early. This is one of the most common mistakes that executors face, is you're tempted to distribute inheritance funds prematurely, especially when family members are in urgent need. I need money, I need this. You know, it's understandable. Emotions run high during times of loss, and financial strains can amplify the pressure to act quickly. However, where caution is crucial, these seemingly accessible funds may hold critical importance later on for settling debts, to make sure you pay your debts, pay your taxes, and covering any unforeseen estate expenses. Because once distributed, retrieving those funds becomes really difficult to do and contentious process. So think of it this way. It's far more prudent to exercise patience and distribute inheritance at the right time, ensuring all financial obligations and legal requirements are diligently addressed. And this way, you can not only honor your wishes of the deceased, but also safeguard the integrity of the estate's financial health. It's very important. So do you want to equip yourself with more essential strategies to navigate this crucial aspect of your role as the executor? So hit that like button, subscribe to our channel, help us gain to 600 subscribers by the end of the summer. Trust me, the insights shared here will not only save you time and effort, also pave the way for smoother and more manageable probate experience. Number three, not making the portability election. If the term portability election isn't part of your estate planning vocabulary yet, you're certainly not alone. However, overlooking this crucial option can lead to significant financial consequences, particularly in the light of potential changes to tax laws. Every year they change, and here's why this matters. The portability election allows a surviving spouse to utilize the unused portion of the deceased spouse's estate tax exclusion amount. Very important. In essence, it's a valuable strategy to maximize tax efficiency and preserve wealth within the family. And failing to make this election could mean missing out on substantial tax savings that could otherwise benefit your loved ones. So timing is crucial here. To secure this benefit, it's imperative to file the state tax return within 9 months following the death of the spouse. And the deadline is non-negotiable. And missing it could forfeit your opportunity to make the portability election altogether. Okay? Important one. Mistake number 4, not following the terms of the will. Now, even if you believe you know what your loved one wanted or recall specific verbal wishes they shared, it's essential to understand that distributing assets based on these informal instructions can lead to significant legal issues and family disputes. The will is legally binding. It's a document. It's legally binding, meticulously crafted to reflect the deceased's final wishes. And deviating from it, even if you have best intentions, if you deviate from it, you can open the door to challenges from heirs and beneficiaries, creating unnecessary complications and potentially costly legal battles. Imagine the turmoil and the heartbreak that could arise if family members feel their loved one's true intentions weren't honored simply because verbal wishes were followed over the written will. Come on now. These disputes, they can not only delay the probate process, but also fracture relationships and erode trust among family members. And I've seen it recently, just recently. It's a shame to see that when family gets all disrupted when somebody dies, a mother or father dies, parent usually. Now, if you want to avoid these complications, you must stick to what's written in the will, and then it ensures that you are fulfilling your legal obligations as the executor, honoring the deceased's documented wishes, okay? It also provides a clear, transparent process for all involved, minimizing the risk of misunderstandings and conflicts. It's there in writing. This is what we have to do. End of story, okay? Mistake number 5, I call it failing to provide all asset information. You got to get it all. You have to get a complete list of all the assets. If you miss an account or property, it can lead to delays, additional paperwork. So do a thorough research and keep detailed records from the start. That's why it's important to know if you're going to be an executor of someone's will to get started before they pass away. Now, one of the most crucial tasks as an executor is to ensure to have this comprehensive list of all the deceased assets, like I talked about. You don't want to miss the account or property. You want to make sure that you don't extend this probate process too long and add unnecessary stress and frustration for everyone involved. Now imagine discovering a forgotten bank account or overlooked property months down the line. This will disrupt the smooth flow of asset distribution, and it requires you to backtrack and gather information and potentially restart certain legal procedures, and it gets very expensive. So avoid this pitfall. All you have to do is to conduct a thorough and meticulous search right from the start. Again, if you're going to execute somebody's estate, know what's in their estate now, because otherwise you have to delve into every possible corner: bank statements, investment portfolios, property records, personal belongings, and even digital assets. So make sure you leave no stone unturned. And if you do keep these detailed records and be organized, all the information, it's great. It's so important that you do that. You have a clear picture. You can show people exactly, here it is, on spreadsheets or whatever you need to do. But again, if you're going to be the executor, you already know you are, know what's going on in that person's estate. Mistake number 6, failure to communicate. I've seen it happen day after day with these estates that we do, because if your communication is not effective, there won't be a smooth and harmonious probate process. The executor has to keep everyone informed. It's not just a courtesy, it's a critical responsibility. It can make or break the entire experience for everybody, because lack of communication is the worst part. I see it happen all the time. It's going to lead to misunderstandings and suspicion among heirs and beneficiaries. And when people are left in the dark about what's happening with the estate, it's natural for them to become anxious and start questioning your actions and decisions, right? The lack of transparency can breed unnecessary tension, conflict, and even legal disputes. And you don't want that. So imagine being an heir, waiting for updates and not knowing where things stand. The uncertainty can be stressful and can erode trust, like I said, in an executor's ability to manage the estate effectively. But on the other hand, regular updates and open communication just can prevent all these issues. So keep everyone in the loop and foster that sense of trust and communication. Ensure all parties are feeling respected and valued through the process. And there's many ways of doing that with Google Docs or Dropbox or whatever. And if you give me a ring, I can show you how we do it for our estate clients. It's important also to include in your communicating about key milestones such as inventory of assets and payment of debts and when the distribution of the inheritance is going to be. And this transparency also, by sharing all the documents, put it in some kind of file, provide clear explanations, can go a long way to build trust prevent misunderstandings, okay? Mistake number 7, confusing probate and non-probate assets happens all this time. So understand the distinction between what's probate and non-probate. It's fundamental key. Knowledge is only crucial not only for efficiency of the estate administration process, but also for ensuring that the deceased's wishes are honored accurately and promptly. So probate assets are those that are distributed according to the terms of the will and must go through the probate court process. These typically include assets like real estate, personal property, bank accounts held solely in that deceased's name. On the other hand, non-probate assets bypass the probate process altogether. What are they? They're assets like IRAs, 401ks, life insurance policies, and anything that was jointly held, any property jointly held with the rights of survivorship, which are transferred directly to the designated beneficiaries, usually between a husband and wife. Upon the death of that person, the wife would get it if the husband passed away. So confusing these two categories can lead to significant delays and legal complication. An example would be if you attempt to include a non-probate asset in the probate process, it can result in unnecessary paperwork, more legal fees, and potential disputes among beneficiaries. And if you fail to properly manage probate assets, that can delay the resolution of the estate, cause frustration and financial strains for the heirs. So if you want to avoid these pitfalls, just have a clear understanding of which assets fall into each category. And this means carefully reviewing all the financial documents. Know it ahead of time, like I said, before the person passes. What do you have? What do I need to know about? And titles as well to ensure accurate classification. If you're not sure, just get some guidance from a estate attorney. They can provide a ton of clarity for you and help you kind of streamline the process. Mistake number 8, not collecting estate funds in an estate account. Oh my gosh. First thing you do, you got to open this estate account. That's a crucial step. The executor needs to ensure that all estate funds are deposited into designated estate account. So when the person passes away, anything that was in the non-estate accounts gets immediately moved over. They won't even let you leave the money in there, okay? So it seems like a little minor administrative task, but legally you have to do it. And it could derail the entire settlement process. You can't mix estate funds with personal accounts, and it's a common thing that people do, but it's a serious mistake. So now if you do this, commingling can create a host of problems. First, it can make it incredibly difficult to distinguish between the personal and estate transactions. And the lack of clarity can lead to accusations of mismanagement or you're embezzling or putting the risk of legal trouble. And furthermore, commingling funds can complicate the accounting process, making it challenging to provide accurate financial records to the heirs and the probate court. So transparency, always key in estate administration, and keeping estate funds separate from your personal accounts ensures that every transaction can be easily tracked and verified. It's very important. It protects you as an executor as well. And it instills that trust I've been talking about and confidence among heirs and beneficiaries. By setting up this account also, you can create a clear, organized, transparent financial structure of managing the assets. And the account needs to be exclusively for depositing income generated from the estate, such as dividends, interest, proceeds from the sale of estate assets, paying estate debts and expenses as well. That's everything out of that account. Mistake number 9, getting help from friends instead of professionals. Ooh, I know estate management can be complex and there's tons of demands and a high level of expertise, but it's just natural to talk, hey, what would you do in your parents' estate, and support from family in such a challenging time. And if you rely solely on their advice, it could lead to significant and costly mistakes. I know they mean well and everything, but you really need to consider this, that the legal and financial intricacies of estate administration encompasses a wide range of responsibilities, from interpreting the will, navigating probate laws, managing tax applications, to handling the proper distribution of assets. These tasks require a thorough understanding of estate law, financial management, and meticulous attention to details. So missteps can lead to legal disputes, financial penalties, and prolonged delays in settling estates. Just get an attorney, consult a professional who has estate law, tap in the wealth of knowledge that they have, and hire somebody. Don't do it on your own, especially if you have a large estate. Because estate attorneys, accountants, and financial advisors, they just bring a level of expertise that ensures all legal requirements are met. And there's all these new laws every year too, okay? It's better to have professional guidance. It can help you identify potential issues before they even become problems. I've seen that happen where a lawyer can know what things are going to happen down the road. For example, a state attorney can provide insights into tax implications you might not be aware of, or help you understand the legal ramifications of certain decisions that you want to make. They can also represent the estate in court if there's a dispute, protecting your interests and those of the beneficiaries. So much they can do. Don't ignore that. Get a professional. Mistake number 10, almost there, ignoring claims against the estate. Oh my gosh. You can't do that. You have to settle all the claims against the estate before distributing any inheritance, because if you ignore valid creditor claims, it's not only a serious legal misstep, it could also a decision that can have personal consequences. Creditors, they have a legal right to be paid from the estate before any assets can be distributed to their heirs. Simple as that. They include like outstanding debts, medical bills, taxes, and other financial obligations that the deceased may have incurred. Now, if these claims are ignored or overlooked, the repercussions can be severe. It leads to potential personal liability for you and the executor. So imagine that you finalize the dispute of assets and get confronted later by creditors demanding payment. What do you do then? Okay, it becomes extremely challenging, and it can lead to, like I say, prolonged legal battles, additional costs, and a significant emotional stress for everybody. So address all the debts promptly, protect the integrity of the estate and your own legal standing, okay? So what does this process involve? You have to notify creditors, right? Verify the validity of their claims. Make sure it's a valid claim, and ensure that all debts are paid in full before any distributions are made. It's a meticulous task, and it does require careful attention and detail and adherence to legal protocols. Very important. Mistake number 11, yes, it's self-dealing. One of the most critical ethical obligations as an executor is to avoid any conflicts of interest. Self-dealing, where an executor takes advantage of the position for personal gain, I see that happen, it's bad. It's not only unethical, but also illegal. This includes actions like underpaying the estate assets or using estate funds for personal benefit. Such practices can severely damage your reputation. You've got legal repercussions, and you're going to get no trust from the heirs and beneficiaries. So the executor, you are entrusted with the responsibility to manage the estate with impartiality and integrity. The role requires a strict adherence to fiduciary duty, meaning you must act in the best interest of the estate and the beneficiaries, and not your own. So if you do that, you can have disputes, legal battles, and being transparent is very important. Avoid any appearance of impropriety, okay? It's essential to fairly value and distribute estate assets, and you need to maybe get professional appraisal. Ensure that all transactions are conducted at market value. I tell everybody, always do that. Get a professional appraisal. Be transparent and open communication with your beneficiaries. I've been saying that over and over throughout this whole video, and that's really important. Mistake number 12, mishandling tangible assets. What is that? Well, it comes to estate management. One of the most commonly charged and potential contentious tasks is the division of the tangible assets. This is the toughest part. Jewelry, furniture, personal mementos, and other cherished possessions. You can't mishandle these intangible assets because it's going to lead to dispute. There's going to be a lot of resentment and fractured family relationships. It's crucial to ensure a fair and transparent distribution. Have everybody come over and everybody work it out, okay? It can be complex though. For example, if a piece of jewelry might have been worn by a beloved grandmother and holds immense emotional significance for some family members, that can be difficult. Similarly, maybe a furniture or a piece of artwork might have been part of a cherished family tradition. Whatever it is, it's a difficult, daunting task. Because you have to overlook emotional connections. That's what you have to do. Otherwise, distributing the items without careful consideration can result in lasting grievances. You don't want to have that. Just document each item's the condition and value. Gather input from heirs regarding their preferences and sentiments attached to specific items. Open communication, like I've been talking about. Ensure transparency, like I've been talking about. Avoid misunderstandings. So, like I said earlier, a great approach, which we do all the time, we tell people to do, hold a family meeting. Do it on Zoom or whatever, and use a structured method for asset distribution. This could include drawing lots, you can draw from the thing, taking turns to choose, or even mediating a discussion where the heirs can express their wishes and negotiate mutually agreeable situations. Professional appraisers are also great. They establish a fair market value, and it's essential to do. And it's a difficult part of the process, but it's essential to do. So there you have it. The 12 common mistakes executors make and how to avoid them. Being an executor is a big responsibility. So I can help you out with that. I can help you navigate it smoothly. And if you have learned a lot today, please like and subscribe right here. Help a girl out to get 600 subscribers by the end of August. Have a great day, and I'll see you on the next video when we talk about probate process, the entire process from start to end.